place, and experience. Indulge your senses with immersive game titles. Boost the excitement with our engaging promotional tools and generous network promotions. Be in control with XI Viewport Management Tool and experience seamless gameplay powered by X Platform. Enjoy place and experience as our partners do in over 20 regulated markets. And get ready to go big. Big play is on. Placent.
Well, hello, one and all, and welcome back to another edition of your Next.io weekly news, where the only things bigger than the headlines are the hairdos. Nico Jansen, what a pleasure it is to be joined by you today. It's All Hallows Eve, 31st of October. Are you feeling spooky today, Nico?
No, not spooky, but thrilled. First of all, shout out to you as well. It's always one of the best days of my week, just sitting down here with you and just talking the latest and greatest of our awesome industry. But besides sitting here with you, today is actually Halloween night, and this is one of the highlights of the year. As I'm just preparing the house, got some sweets, and I will be so thrilled to welcome all the kids from the neighborhood. They are just, walking by and just being so thrilled, all the shiny eyes and just being super happy, at least as happy as I am. It's always good to connect with the folks just in the neighborhood. So I'm looking forward to the evening, which will be a lot of fun besides having fun with you on a weekly basis.
Excellent. Yes. I hope you've got your costume at the ready, Nico, and you're ready to dish out some sweets. I might go and knock on a couple of doors tonight. I have a bit of a sweet tooth myself. Maybe I'll pop a mask on and go around the local neighborhood here as well and see if I can get some freebies out of the neighbors. But maybe not. I don't want to bring the tone down, Nico, but I will preface this episode today by saying we haven't exactly got the happiest news in the world this week, have we? There's some kind of developing themes in the sector at the moment, and we've seen a new wave, I would say, of layoffs in the sector. We've got some big changes at DraftKings, Caesars, Better Collective, Catena Media we had last week. So there seems to be something in the air at the moment. People are cutting costs, and that has meant that a few jobs are coming under threat. So we're going to dive a little bit deeper into what's going on at some of those companies and what's behind the headlines, as always. But Nico, before we do that, you just know that it wouldn't be weekly news without the trademark Nico Jansen 10 in 5, where we get all the biggest headlines in theory, 5 minutes. But let's see if you can make it to your deadline today. Are you ready?
Yes, I am. So, besides all the sad news, which we'll touch on in more detail later on, we have a new player in the gaming sector, as EasyJet is about to launch their online betting of EasyBet. So Easy Group, the brand behind the renowned budget airline EasyJet, is now entering the sports betting industry with the launch of EasyBet.net. This new venture will operate as a peer-to-peer betting exchange in partnership with Matchbook, a platform designed to allow customers to bet directly each other and not against the house. So it's the Betfair approach. And we also have an official statement which reads as follows. The launch of EasyBet.net will provide customers with the assurance of legitimate member of the Easy family and a trusted Easy brand, and prevent any further brand infringement in this sector, the company said. So welcome to the gaming industry, EasyJet as well. Heading over to the US, as Sands CEO is still interested in a New York City casino bid, but they are concerned. Why are they concerned? So the Las Vegas Sands chairman and CEO Rob Goldstein is raising concerns about the company's $6 billion casino resort proposal for New York's Long Island. The potential introduction of legal online casino play in the state is emerging as a factor that may impact the company's long-term investment in traditional brick-and-mortar casinos. But the official statement reads as follows: "We remain interested in the process," Goldstein said. Heading over back to the UK, as the UK gambling operator share prices surge after escaping tax hike. Last week, we just touched on the probable increase of taxes and taxation in the UK, but the change was rumored to involve taxes doubling on higher harm gaming products, including a remote gambling duty, RGD, of 50%, which would be one of the highest rates in Europe. However, Chancellor of the Exchequer, Rachel Reeves, did not ultimately opt to pull this lever, announcing there will be no new gambling taxes in Parliament. So let's wait and see. As of now, stock prices of the affected companies all already, got back on track. Staying in the UK, as we have a partnership, as the UK Gambling Commission partners with Maltese MGA for safer gambling knowledge exchange. Through the agreement, both regulators will exchange information and intelligence to build up better consumer safeguarding measures, curb criminal behavior, and reduce gambling harm rates. Andrew Rhodes, who is the UK Gambling Commission CEO, says, "We welcome this agreement as a sign of our continued collaboration between the MGA and the UKGC. We've been working closely for some time now, and following our successful visit this summer, it is only fitting that we formalize our working relationship." Staying in Europe with the latest numbers from Lottomatica, as Lottomatica's Italian online market share hits record of 30%. Lottomatica Group has achieved a record high in Italian online gambling market share, reaching 30%. The announcement led the Milan Borsa listed group's Q3 trading update, as Lottomatica targets full-year revenues of 2 billion euros and adjusted EBITDA between 700 and 730 million euros. Guglielmo Angelosi, who is the chief executive officer of Lottomatica Group, commented, "We are very pleased with the progress achieved so far this year. Our business has experienced double-digit growth, and in Q3, our online market share reached an all-time high across all verticals. And now the integration with SKS is advancing at a fast pace, and we upgraded the level of synergies we expect to extract." Going even further to the east, as Aristocrat issued first UAE supplier license. Aristocrat has become the first international gaming technology company to receive a license from the United Arab Emirates General Commercial Gaming Regulatory Authority, shortly GCGRA, and the Australian slot machines manufacturer announced on Monday. The license, categorized under gaming-related vendor, allows Aristocrat to supply land-based electronic gaming machines and online gaming solutions to licensed commercial operators in the UAE. So shout out to the Wynn Resort. Now you can also deal with Aristocrat and equip your existing and built casino with Aristocrat slots machines. Woohoo! Then Ireland's new gambling regulatory authority is set to launch in phase mid of 2025. The recently signed Gambling Regulation Act overhauls the licensing regime and establishes the new regulatory body in Ireland with 3 key points. First of all, new gambling regulatory authority in Ireland to launch in phased approach in 2025. Second, the regulator will oversee betting businesses, including implementing licensing requirements. And third, authority to establish a national self-exclusion register for problem gamblers. So we will see in mid of 2025 what will come out of this. Then Caesars closes a 500 million US dollar sale of World Series of Poker brand to GG Poker. Caesars Entertainment has finalized the sale of its intellectual property right for the World Series of Poker WSOP brand to the NSUS Group, the parent company of GG Poker. The transaction has been closed for the previously reported 500 million price tag, which equates to 250 million in cash and a 250 million promissory note due 5 years after the transaction closing, secured by the WSOP intellectual property assets being sold. And this deal comes with some additional information, as through the deal, Caesars Las Vegas casinos will retain the right to host the flagship WSOP live tournament series for the next 20 years. 2 more to go, as Texas sport betting lightly long shot in 2025. Texas legislators made a push in 2023 when the House passed a package of bills legalizing Texas sports betting. However, with Governor Dan Patrick, a vocal opponent of gambling, at the helm of the Senate, the bill stalled, so did not move forward. Texas legislators only meet during odd years. Earlier this year, Dallas Stars president Brad Alberts told the odds of sports betting Parsons were 50-50 at best. And an official statement reads as follows: I think it is the same spot it was. The same challenges exist, which is a resistant Senate led by the Lieutenant Governor, Alberts said. And I don't think that has changed. Obviously, those same personalities are still in office. So keep your fingers crossed that we will see a movement in Texas, but no earlier than 2025. And last but not least, the Seminole tribe of Florida finally reaches a deal over online sports betting. Calling it a win-win, Seminole tribe of Florida leaders announced on Monday they had reached an agreement with Perry Mutual Companies that will end litigation over a 2021 deal that gave the tribe statewide control over sports betting. Jim Allen, who is the CEO of Seminole Gaming, called the deal a win-win agreement for the tribe and the companies. And the official statement reads as follows: rather than engaging in years of additional litigation, this agreement will allow the parties to work together to promote JLI, which has played an important role in Florida's gaming landscape for nearly 100 years. So, the issue has been settled in Florida, and we will see how this one turns out, if they will open up the market just a little bit for also other operators. But you will be close to the pulse with listening to whatever Connor and me will just tell you on a weekly basis. And now my 10 and 5 is done, and I'm proudly handing over the voice to my host, Connor Mull here.
Very nicely done, Nico. I don't know if you've ever had the pleasure of flying on an EasyJet plane, but I have. And I must tell you, it didn't make me think, do you know what I want to do? Give these people more money to bet with, because I didn't find the experience to be especially gratifying, to be honest. So I'm starting to wonder exactly what EasyBet is going to look like. But kind of interesting that it's with Matchbook, so it's going to be an exchange, and obviously Betfair kind of holds that almost a monopoly on that because they have the liquidity in the markets. So let's see what happens for EasyBet. Seems to me a slightly strange move for EasyJet, but I think they've done lots of the different things. And another couple of things I'll point out while we're here. From your 10 in 5, the UAE's aristocrat license, you were quite rightly pointed out, also allows it to offer online services. So we don't have any detail on what that actually means yet, but there's something in there about online services. Maybe they're thinking about some kind of online regulation as well as land-based over there. So we'll keep you updated on this one as always. Anyway, on to our main stories of the week, Nico. And as we have already mentioned, it's not always the easiest thing to talk about. We've got people's livelihoods at stake, unfortunately, because there has been a growing number of layoffs in the sector in the past few weeks. So we've broken these down into the different companies where these things are happening. And we're going to take a closer look at exactly what's going on here. So the first one that I'd like to talk about today is DraftKings, and this was first reported by Next.io just yesterday, and it was an exclusive scoop from Zach Thomas-Aku, our fabulous senior reporter, who managed to find this information. So basically, DraftKings is going to close down its Atlantic City live dealer casino studio. As a result, it will be laying off 101 of its employees. And that's due to take place, Nico, on the 31st of January 2025. So a couple of months away. So we first got hold of this news because it was revealed in what they call a New Jersey WARN Act notice. This is a notice that's published by the New Jersey government, and it notifies employees of major companies when there are going to be significant layoffs 60 calendar days in advance of them taking place. So if you're an employer in New Jersey, I think you have a regulatory requirement that if you're making layoffs of this scale, you have to notify the state and you have to notify the employees. So we found that out yesterday, and according to an industry source, the company and DraftKings itself announced the news to all of its staff at the live dealer studio on Monday, and there were senior executives on site for the announcement. So obviously it's not being taken lightly. We know it's a very serious decision. So Zach and I were doing some digging into this just to try and work out exactly where this was going to take place and what studio and what employees were going to be affected. It wasn't actually that easy to figure out. There's a few different stories about DraftKings live dealer capabilities in New Jersey. It started a couple of different projects. So I just want to run you through the background, Nico, because eventually we did get some clarity from DraftKings on this. So we knew that they'd launched their own kind of DraftKings branded exclusive proprietary studio at the Hard Rock Casino Atlantic City in 2019. That was launched in partnership with Evolution. But what happened next is, of course, as you remember, DraftKings acquired Golden Nugget Online Gaming. So they acquired Golden Nugget's online assets and left the land-based properties to the previous owner. But a big part of that deal for DraftKings, and like I say, yesterday we were digging back through all this and looking at investor presentations and reports and seeing what they'd said about it. But a big part of the rationale for that acquisition was about bringing those live dealer capabilities into DraftKings. So Golden Nugget was actually the first company to launch a live dealer studio in the US back in 2016. And that was inside the Golden Nugget Atlantic City Casino. In 2021, it increased its capacity, and then the studio was relaunched in 2022 after DraftKings' completion of the acquisition, which, if you remember, was a $1.5 billion acquisition, so pretty major deal. So DraftKings had its own studio at the Hard Rock, then it acquired Golden Nugget, it took over the Golden Nugget studio. Anyway, we were trying to work all this out yesterday morning, and eventually we got a reply from DraftKings to tell us exactly what was going on. So Zach got in touch with DraftKings and they told us, quote, "As we finalize our GNOG integration effective January 31st, 2025, DraftKings will transition its in-house live dealer operations to third-party studios in Atlantic City. We are supporting impacted employees to offer a smooth transition for as many as possible. Our live dealer offerings will remain interrupted." So not a huge amount of detail there, Nico, but we do know that they're going to be transitioning to a third-party supplier. for their live dealer operations. So they're not going to be operating their own studio anymore. That does raise a few questions, I suppose. Does that mean that the Golden Nugget acquisition didn't really provide them with everything they needed, or have they actually been able to use those assets and extract as much value as possible from them in just a couple of years, and now the smartest thing is to wind it down? As you know, a lot of the third-party suppliers, Playtech, Evolution, obviously kind of the big names, and there are several others out there, but they do offer kind of operator branded tables and all this kind of personalized service. I think it's part of the user experience. If you're a DraftKings customer, you kind of want to feel like you have this exclusive DraftKings roulette and DraftKings DraftKings Baccarat, whatever it is. Anyway, yeah, and I just think probably at this point, Nico, every company out there seems to be tightening their belt. There's this huge push for profitability in the US. Everybody's cutting costs, and I think the economics of this probably makes sense to actually just outsource a lot of that. Obviously, 101 employees adds up to significant salary and benefit costs every year. So it seems like it's kind of probably a purely economic decision at this point. That perhaps they've come to a stage where they think now that a third party can do as good a job as what they were doing in their own studio, but for less money. Anyway, we don't know yet which third party supplier DraftKings is going to be transitioning to. We do know that DraftKings has worked with Evolution before, as I said, in 2019 to set up that studio in Hard Rock Casino. That was done together with Evolution. And another story from earlier this year was that Evolution is reportedly considering a significant expansion in New Jersey and has plans for a new $75 million project featuring a 4-story, 130,000 square foot building that would allow the company to employ 2,000 workers by 2029. Obviously, a pretty significant investment for Evolution. So it kind of, maybe that's something that kind of matches up. And DraftKings are thinking, well, if they're going to put all that money into setting it up, maybe we should just pay them to do our operations for us. So obviously, Nico, the upshot of all that is that unfortunately 101 jobs are no longer going to be required at DraftKings. So a lot of people are going to be laid off. But that's pretty much all we've got on this one for now. What did you make of this one?
Yeah. So in the end, it all, especially, considering M&A activities and the synergies, etc. Obviously, DraftKings has been eyeing on something else except the kind of live dealer games. And this all comes down to one question, and this has been raised by Nicholas Carr in the make or buy statement, right? So Evolution, they obviously are best in class of operating this live dealer tables, etc. And if they want to settle down or set up business in New Jersey as well, please be aware that if you want to offer live dealer games online in New Jersey, you need to operate the tables in New Jersey as well, in the state of New Jersey. And then you can offer as a B2B supplier this offering to also licensed entities, casino licensed entities in New Jersey as well. So it makes sense to actually offboard these 101 employees and give them a chance to actually move their new career to Evolution. As said, Evolution best in class. So it's not like, first of all, that they won't find a job. Probably they will just find a job at a different operator, Evolution. And if they can participate in their, buying shares of Evolution, probably they might be better off with Evolution giving them a new workplace as well. But as you already mentioned, we don't know this yet, but it would make sense. Just let us put it this way.
Yeah. Well, we'll bring you more on this as soon as we find out, Nico. I think once the transition takes place and once the DraftKings studio closes, I think it'll be pretty obvious to see. Usually, you can kind of tell which company's running the live offerings. They all look slightly different. I suspect it will be Evolution because of the history between them and DraftKings, but you never know. They've got every right to go for somebody else. So we will keep you updated. That was our first story today about the new wave of layoffs. And as I mentioned, Nico, this all kind of points towards this mindset of cost reduction that we're seeing at the moment, and we're seeing it in lots and lots of businesses. Over the last few years, capital became quite expensive. People stopped borrowing as much. People were kind of feeling they're a bit over leveraged. There's a lot of spending. I'm just giving you word salad now, but you understand what I mean. There was a lot of spending, a lot of investment, and now they've got to kind of reel that in a little bit. And we're seeing the same thing happening at Caesars, which is our next story. Now, this is not news that Caesars is cutting costs. We know they're doing that. They've been doing that quite heavily since about 2022. But we had another exclusive story. It's just a shame that all these exclusive stories are exclusive sad stories, but this is the way things go. So shout out to Sonia Lindenberg at Next.io, who revealed this exclusive earlier this week as well. I think we're talking about a much smaller number of roles here than the DraftKings story, but basically Caesars Entertainment recently underwent a team restructuring affecting several creative staff members within its in-house creative agency. Although the exact number of affected roles remains unconfirmed, our sources indicated that nearly all of the remote creatives who contributed to the launch of the Caesars Sportsbook app are no longer employed by the company. So this is the latest from Caesars. As I said, Nico, they've been cutting costs quite a lot. There was another wave of restructuring earlier this year. If you remember, there were a load of senior executives from the company's entertainment division whose jobs were lost. So that was back in January. Reports said that Caesars had laid off up to 10 top corporate employees in a consolidation of the entertainment division. So the VP of corporate entertainment, VP of entertainment and attraction marketing, VP of brand alliances and sponsorships, all these kind of vice president managerial overseeing roles were just axed. And I think, again, it's all about saving that money from the salaries and bringing costs down and becoming more efficient. So, like I said, back in 2022, Tom Reeg, who's the CEO of Caesars, pledged to significantly reduce marketing spend, and he set in place this target of $500 million in online EBITDA by 2025. So the deadline is fast approaching. Caesars needs to keep its costs low, but the Q3 results came out yesterday from Caesars. The digital division was actually a standout performer. So the online operations going, I think, much better than you might expect. So $303 million in quarterly revenue. That's just from online. And that's a 41% improvement over last year. So pretty impressive, actually. And adjusted EBITDA for the quarter was 52 million compared to, get this, 2 million in Q3 2023. So massive improvements there. You can see the kind of cost savings starting to pay dividends. So Tom Reeg said yesterday, I think that business is going to end up generating a hell of a lot more than the $500 million target that everybody has been wringing their hands about for the last 3 years. So we feel very good about that. Well, fair enough. Now, another couple of things with Caesars and talking about deleveraging and simplifying and becoming more efficient, and also just getting some cash in the door. Caesars announced yesterday that it has agreed to sell its Link Promenade. This is like a little shopping area in Las Vegas with restaurants and bars and things. Anyway, it's selling that property to a joint venture between TPG Real Estate and Acadia Realty Trust's investment management platform for $275 million. So pretty significant numbers there. And as you mentioned in your 10 in 5, Nico, it also signed a deal to sell the intellectual property rights for the World Series of Poker brand to Ensus Group, which I think they want us to pronounce answers, as in like the word answers, as in questions and answers. Absolutely not. NSUS does not spell answers, guys. Sorry. But I think that's the owner of GGBet, isn't it? So that was a $500 million deal. So they're selling things off. They're cutting costs. Again, we've had this news story that several jobs have been lost, which is obviously very sad. But Nico, you kind of can't argue with the results, I guess, and things look actually pretty positive on Caesar's balance sheet at the moment. What's your take?
Yeah, pretty much the same. So if you just take a look at how investors actually see M&A activities, the first thing they want to see is like letting people go, cutting costs, etc. And then they are pleased for whatever reason. And then usually, the as you mentioned, the EBITDA increased significantly, and this is just if you're playing around with how you actually make sure that certain numbers hit or don't hit your balance sheets, and this obviously sometimes results in a very very good good outcome with respect to the numbers, or you can also increase costs significantly, which we touched on last week as well, with a small island or a small property and deduction of costs, etc. As you mentioned, we're sorry for the people being laid off, but it's also a chance to actually look look out for a new job. Unfortunately, and this is the next topic we will touch down, it's not the only company actually cutting people, letting people go, etc. So as you already mentioned within your introduction of this week's weekly news, it's just sad news. But from an investor perspective, increasing an EBITDA from 2 million to 52 million over a time span of 1 year sounds pretty amazing.
Yeah, there you go. Well, I must admit, I kind of thought that Caesars was not a huge player in the sports betting sector, but it does seem to have managed to hold on to a reasonable market share, because I think that was pretty evenly split between sports betting and iGaming, that those digital earnings. So pretty impressive. But anyway, Nico, yeah, there's more still to come, I'm afraid. More layoffs in just a moment. Before we move on to our next story, though, I think we do have a short video message to share from one of our partners.
Games, hundreds of studios, dozens of hub market partners, an industry-leading hub wallet, tens of thousands of games, hundreds of studios, dozens of hub market partners, an industry-leading hub wallet, and just one API. Hub 88 is connecting businesses to a world of limitless content where the possibilities are endless. Hub 88.
Well, there you have it, and thank you to Hub 88 for sponsoring this episode once again and keeping us coming back here every week. Now, we've already been through several layoffs, Nico, in the past few minutes, but now we've got, I'm afraid, even more to talk about. I know you've been taking a closer look at the affiliate sector this week, and it doesn't seem to be in a particularly happy place right now. Tell us what you've been looking into.
Yeah, so first of all, last week we already touched on the layoffs at Catena Media, and they announced that they have been implementing cost-cutting measures, including the elimination of 29 positions in its current content and production marketing teams. Guess what? Yesterday, Better Collective CEO Jesper Sogard said the following on LinkedIn. today I shared with our team the details of the plan we are introducing to adjust our cost base following our recent trading update, including a downgrade of our financial targets for the year. Unfortunately, this plan also includes the difficult decision to part ways with some of our colleagues. Each of them has played a role in shaping Better Collective into what it is today. And for that, I owe them all a big thank you. The decision was not made lightly, but promoted by lower than expected performance, in particular due to the shifts in the US market, as well as a continued slowdown in commercial activities in Brazil in anticipation of the upcoming regulation markets that in recent years have been growth drivers for BC, Better Collective, and which we still believe have strong long-term growth potentials ahead. So as said, this is just this is the official statement which Jasper has put out on LinkedIn. We did not yet get our hands on additional information, but there are rumors flying and floating around due to the M&A activities. The European-based parent of Playmaker headquarters and the Action Network, they laid off, and they have been acquired by Better Collective. They have laid off at least 100 employees this week. And Playmaker Capital was acquired by Better Collective last year in a deal valued at nearly 190 million US dollar. The transaction included Yardbreaker Media and World Soccer Talk as part of the deal. And this comes after the business. So getting back to the statement of Jasper, this comes after the business issued a revised outlook for its 2024 financial performance last week. It now projects revenue between 355 million and 375 million for the full year of 2024, down from a previous estimate of 395 to 425 million. And the expected EBITDA before special items has also been adjusted, dropping to between 100 million and 110 million from the earlier forecast, which ranged from 130 to 140 million. And you know, Better Collective is a publicly traded company, and there you actually see how volatile this news actually hit the stock market, as the Better Collective shares dropped close to 40%, so 40% on the news. So after these news actually hit air and have been published as well. So they are still presenting strong numbers with an EBITDA of 100 and 110 million. They are not filing for bankruptcy, first of all, but it obviously, and I'm pretty sure also Evolution and what's going on at the C levels of Evolution, they might, you know, join this song as well. As soon as bad news hit news agencies, all our companies in the gaming industry see a significant drop in value, and Better Collective shares dropped almost 40%. So it's quite interesting to see this one as well. But as we already touched on also in the introduction, it's not all sunshine and rainbows within every industry. But I'm pretty sure, as we stated also for Catena Media last week, good people will always find a new job as well. What do you think out of this story, Connor?
I think the share price drop was quite shocking. I mean, if you were an investor, you know what that means is if you had 10,000 euros worth of Better Collective shares, all of a sudden you had 6,000 euros worth overnight. I mean, it's just a massive, rapid drop, fell off a cliff, and it's a reminder, I think, of how volatile this sector can be. And I feel like perhaps the affiliate space is an especially volatile part of an already generally quite volatile industry. Like there's a lot of moving parts across the world in terms of regulation, competition, M&A. All these things have an impact on share prices, and I feel that gambling is particularly susceptible to that. And then in the affiliate sector, you add in the fact that Google, which is not a world government, it's another company, but they can do something that will completely change your business because and that's something you don't necessarily have control over. So it was a reminder of how volatile shares in this space can be. And I do think if you look at the Better Collective share price chart over the last 5 years, say, it's been very steadily and solidly growing and increasing all the time. And I think you could make an argument that it was due some level of a correction, and the market was waiting for some negative news, and it was like, okay, now get rid of those shares. But what surprised me was the scale, Nico. Like 40% is obviously quite uncommon for a stock to drop so quickly. So I mean, you obviously have broad experience in other markets as well from your time before iGaming. Do you think that this is particularly a problem for gambling? Are there other industries where stocks drop so fast like that?
So I'm pretty sure it's just based on the time as of now, and probably also on the background of the investors. So if you're just talking to professional investors, right, they are holding stock of different verticals, different companies across whatever is possible in the financial sector. So if you announce just an EBITDA reduction of probably, what was it, 12, 13, 14%, you'll still make money, right? So it's still a legit company. But people tend to overreact, and this is just based on the professional background. So out of a sudden, this is when one stone actually starts moving in the wrong direction, and this just affects all the other stones from crashing and actually, winding down and falling as well. And this just happens to each and every company which is stock traded. So we've seen this within the communication sector as well, with T-Mobile in the US now, a German-based company which invested heavily into T-Mobile US as well. As soon as they announce numbers who might, affect the EBITDA as well in a negative way, out of a sudden you actually see these panic reactions, people actually throwing out their stocks onto the market as well. This is when you actually see prices significantly dropping as well. As you see, if you just take a look at the order book, which you can do, and then you see a lot of market order. A market order always implies sell to the next valid possible price where the stock actually is priced in. And the more market pricing you actually have, of course, this will lead to a significant drop of the overall price. So you can see this within all industries, across border, wherever. And as said, this is just based on the professional background of investors.
Yeah. Well, as Warren Buffett always says, if you believe in the business, you should hope for the stock to go down, because then you can buy more. So actually, if you're in it for the long run, it's a good chance for people to increase their investment. But like I say, it's it'd be a bit of a shock, I think, if you bought the shares last week and woke up one day and they had just fallen off the cliff 40%. It's mustn't be a very nice feeling for a lot of those investors, and it's easy to understand why that panic reaction can set in. You think, oh, just cut my losses now before it gets any worse. But yes, if you want to invest in the stock market, it's always best to have an eye on the long term, Nico. That's my view, because I'm so sophisticated. What do I know? This is obviously not investment advice. Otherwise, I would take my own advice, wouldn't I? Anyway, that's a lot of pretty negative news, really, Nico. But I think I appreciate your analysis on some of these questions, and it's been good to discuss them and dive a little deeper into what's happening behind the headlines. But shall we try and close the week on a slightly more positive note?
Whatever you're feeling comfortable with. Okay,
I feel comfortable with a bit of positivity, Nico. You know me, Mr. Positive, they call me, Connor Positive Mulher. Right, so we never like to miss an M&A deal on Weekly News. We like to bring you the latest and greatest. And we have got our last story of the day, which is all about Glitnor Group. Glitnor Group has acquired OneCasino. By the way, that's the name of the brand. It's an online operator called OneCasino, and Glitnor has signed a share purchase agreement to acquire the business for an undisclosed sum. We don't know how big a deal this is, but I think it's pretty significant for Glitnor, which is not the biggest company in the world, but they're up and coming, rising company in the sector. So, OneCasino currently operates in several regulated markets in Europe, so Netherlands, Spain, Denmark, and it has plans, Nico, to enter your homeland of Germany once its final licensing approval is granted. So, just waiting on the Glücksspiel Glücksspielleiderloden, the GGL, to process the application. Thank you. My pronunciation pretty good, yes. So Glitnor expects to complete the acquisition in the first half of 2025, sometime in the next 6 or 8 months, subject, of course, to regulatory approvals from the relevant authorities. So what did Glitnor say about the deal? It's going to enhance its financial scale and extend its reach, resulting in operations across 8 regulated European markets. The company wants to capitalize on commercial, operational, and technological synergies to support accelerated growth and profitability. And Glitnor projects that the consolidated entities will generate over 150 million euros in revenue on a pro forma basis in 2024. So it's, I don't know how much of that business is Glitnor's and how much is OneCasino's and how much of it's synergies, but 150 million in revenue is not to be sniffed at, Nico. So one of the key factors in the appeal of OneCasino was its advanced proprietary tech stack and focus on player engagement, Glitnor said. And of course, this marks the first kind of big move from Glitnor since Richard Brown stepped into the CEO role. I think last year. It was last year. I remember because I spoke to David Flynn, the former CEO, now a non-executive director, about that at iGaming Idol last year. And we had a lot of fun about that. So shout out to David Flynn, shout out to Richard Brown. Richard said, "We are tremendously excited to welcome OneCasino and its team into the Glitnor Group. The transaction accelerates our long-term vision to become a leader across high-value, regulated markets in the iGaming industry. The hugely complementary geographical profile and high-quality product OneCasino have rapidly expands both companies' short and long-term addressable markets." So there you have it. Regulated market focus, Western Europe, going for it in Spain, Netherlands, Denmark, Germany. And that's what they're doing, Nico. Pretty much no more detail from that on this one, but I just thought we would end the podcast on a slightly happier note and say, well, at least, the world keeps turning and there's always going to be more consolidation in the iGaming sector because these businesses just love to buy each other.
Yep, that's right. And getting back to your point of, having the pleasure talking to one of the greatest in our industry, David Flynn. If you just remember last year, that awesome guy rode his little bike from Denmark all the way down to Malta. So he raised some capital as well, because it's always a difference if you are, if I'm not mistaken, it was yesterday or was October the breast cancer month. So just reminding people to actually now take into account that there are actually things out there who are way more, or which are way more important than just a couple of news. It's the healthiness of all the people we love and who are close to us. And David just rode his bike, as said, from Denmark down to Malta. And if I'm not mistaken, he raised a couple of €1,000, which he then gave to charity. So once again, it's not about spending money one time, but it's a good cause to actually follow that great guy who, just by a crazy idea, had nothing else to do to just, ride a bike for a couple of days, 30 days on his own Tour de France, tour through Germany, from all the way down from Denmark to Malta. So once again, shout out to this great guy. And just look up the first of all, you can re-listen to the show when we were discussing this little bicycle stunt with him last year. And it's always great to actually, talk to him.
Absolutely, yes. Maybe we'll see David in Malta in a couple of weeks. We must remind our viewers, Nico, anybody who's going to Malta between, let's say, the 10th and the 16th of November. God, forgot the month. Come and say hello. Nico and I will be around. We'll be doing a bit of networking, a little bit of gin and tonic drinking, maybe, if we're very lucky. And it's going to be a fun time. So do come and say hello to us. Until then, I suppose all there is left to say is thank you to Playson and thank you to Hub 88 for sponsoring this episode once again. Thank you to everybody for watching. Thank you to Lorena, our fabulous producer, and Nico, last but never least. Thank you once again to you. It's been such a pleasure, and thank you for being here today.
Thank you for giving me or providing, the space and time, actually, to speak out my mind. And as you already said, thank you to all the listeners and thank you to the industry for moving on every week, giving us the chance to actually speak about different topics every week, which is awesome. And hold your horses, but next week on Thursday we will actually announce where you can meet the gruesome twosome, so the both of us, while being in Malta. And we're looking forward to meet each and everybody of our thousands of listeners, just live and in person, during our time in Malta.
Yeah, it's going to be a lot of fun. Thank you, Nico. And thanks once again to everybody. We'll see you back here at the same time, same place next week. And yes, we'll reveal the exclusive details of where you can find us in just a couple of weeks. Bye, everybody.
Bye.